What's good for the labor market is not so good for the stock market. What's going on, everyone? Jeremy Ritz here. Courage pays better than fear trading. It is still a little chilly out here. It was sunny this morning. I was like, yes, we're going to get some of this snow melted, and some of it is slowly fading away. And we're supposed to get a 50-degree day coming here soon. So spring is coming, I guess. But anyway, we got some important data today for the stock market. We got non-farm payrolls, which came in higher than expected. So more job creation than anticipated, and the unemployment rate ticked down. Now, when this data first hit, we saw a huge spike in the market. We saw things rip higher. And then what happened after that? It dropped. And we had a sell-off. And it wasn't massive. I'm gonna get a haircut, guys. It wasn't a massive sell-off, but we were down around 25 points on the SPX. At the time I'm recording this, we bounced back a little bit, up around 12 points, but it's more of the same that we talked about yesterday on Driven. It's more of the chop and slop. And what is good news for the labor market is not necessarily good news for the stock market. Now, what does that mean? Well, if there are jobs being created, if unemployment is dipping, if there's some stabilization in the jobs arena, then what that means is the Fed does not have to be in a rush to cut rates, meaning that they can hold tight in terms of where the federal funds rate currently is. Now, we know that Mr. Market loves rate cuts. It's the fuel that keeps this thing running. And it's a reason why we've kind of been stuck here as of late, because the market isn't getting its sugar rush. It's not getting its fix. It's not getting its hit, right? I need to hit that rate cut. It's not getting it. And so you would have to imagine, and I haven't checked the probabilities, but the next cut has been factored in for June. But you have to wonder if this data that was released today is going to push that out a little bit further. Now, keep in mind, we don't have a Federal Reserve meeting this month. We don't have a Papa P presser this month. We'll get one in March. So we're really not getting a lot of information related to rate cuts, right? Now, we are getting Fed speakers, but they're all really saying the same thing. And so now we got to shift our attention to the next data point that is going to be released here on Friday, which is going to be CPI, Consumer Price Index, inflation. And is it going to come in hot, or is it going to come in cool? Now, here's the thing. If we get a hot reading, you would think that is the trigger to drop the market. You would think, because we had the weakness come in last week. You had the reaction of a move higher off of non-farm payrolls, unemployment rate today, and then they dropped it. And so we're coming back a little bit, but the market is just yo-yoing. It's doing this. And like I've been talking about, it's tired. A hot inflation reading might be the knockout blow, or it might be the reason for the market to say, it's time for a rest. It's time for a nap. So that's going to be key. That drops 8:30 a.m. Friday, and that's going to have significant impact on where we are headed. So we'll go from there. But the most important thing, and keep this in mind, whether you're a trader, whether you're a long-term investor, here's the real key. So there's all these factors, there's all these elements of influence out there related to economic data, earnings reports, comments made by Trump or other economic figures. Sure, all those things happen. But the thing that keeps you grounded in terms of all of that noise is charts. Your ability to read charts, knowing your support areas, your resistance areas, knowing your moving averages. And when you have an understanding of technical analysis and how to read and interpret charts, the noise that comes in day to day, you're able to anticipate with pretty good confidence what is going to happen with the price move. Meaning, let's say something negative comes out. Well, through your chart analysis, you're going to know if this does drop, hey, this is the area more than likely where it's going to bounce. That just comes from good chart study habits, good technical analysis. And so keep that in mind. Yeah, we pay attention to the news, we pay attention to the noise, but it always comes back to the charts. That's where it starts, that's where it ends. So anyway, that's what I got for you guys here today. Have a wonderful, what is it? It's a Wednesday. My Lord. Have a wonderful Wednesday. Happy birthday, Dad, if you're watching this. Make it a great day. Honor the moment. And as always, be grateful. And I'm going to throw this in. Next big class is coming in April. I'll leave you with that. Take care, everyone.